What's up, everybody? It's Levi from Wall Street Survivor, and we're back. There are so many people who think it takes thousands or even tens of thousands of dollars to start investing, and that's just simply not true anymore. Today, you're going to see how far just $100 can take you. We're going to talk about 5 simple yet essential steps that you can take starting today with as little or as much money as you want to start investing. I want to say thank you guys so much for your support so far with these videos. The engagement and the feedback have been awesome. If you find this video helpful, make sure to like the video and subscribe to our channel for more videos like it coming super soon. And make sure to keep commenting any questions you have or any feedback you have for me, including ideas you have for future videos. I'd love to hear from you guys. And one more thing before we get into the video, I want you guys to know that absolutely every single one of these steps is for your benefit. At Wall Street Survivor, free financial education has been our priority for the past 15 years. And our mission is to show anyone and everyone that learning to invest is one of the most empowering ways that you can start building your ideal financial future. You'll see a lot of specific services recommended in this video, but that's because we actually think they're the best ones out there. We have partnerships with some we don't, but at the end of the day, they're all resources that I've tried, I've used, and they've helped me. So I just want to share them with you guys so that you can start using the best resources out there to start investing. Okay, so let's get into it. 5 simple steps that you can take today to start investing with very little money. Now, not too long ago, I was a broke college student. Most people are in college, and by no means am I rich now. I totally understand what it's like to start with a tiny amount of money in the stock market. I did the same thing. So I want to encourage everybody as a first step to take a self-assessment. What are your goals? How old are you? What stage of life are you in? How interested are you in the stock market? How interested are you in investing in general? What's your investment horizon? Now, if you haven't heard that term before, it's one we talked about in several of our videos. It just means how long are you looking to invest for? Are you looking on more short term of the scale, maybe the next 3 to 5 years? Or are you ready to start saving for retirement, maybe in the next 20, 30, 40 years? Another big one is risk tolerance, and that relates to the investment horizon, and that's just talking about how much risk is safe for you to take. If you're a younger person who's just starting investing, it's healthy for you to take a decent amount of risk because in the long run, it's likely that that risk will even out and you have plenty of time to make up for it. If you're older and you're going to retire in the next 10, 15 years, it may not be as smart for you to take as much risk. Make sure to check out our Survivor 101 series with specific videos talking just about investment horizons and risk tolerance. Anyway, the point I'm trying to make is it's really important to sit down with yourself, analyze what your goals are, where you're at in life, what your income levels are. Just get a good picture of your overall financial health so that you can determine how much money you have to invest and how you want to invest it based on how long you're looking to invest and the risk that you're able to take while doing it. The second point is all about habits. Habits are what make good investors. And everybody knows that making new habits and changing your old ways takes a lot of discipline and self-control. But there are a few things you can do to help make investing habits easy. And that way, while you have little money, you get into good habits. And then when you make more money that you want to start investing, those habits will already be in place. It's one of the smartest things you can do as a beginning investor. The biggest thing I would encourage is to start investing monthly. If you have a lump sum of money saved up, which is honestly how a lot of people start investing, that's great. And definitely don't shy away from putting that money in the stock market. But in the long run, it's probably better if you get into the habit of taking a certain amount of money out of your income every month and investing that money in the stock market, getting into the habit of doing it month over month. That way, like I said, when you have more money coming in, you'll already be in the habit of investing. Monthly, bi-weekly, or even weekly investing can also be really smart because it takes advantage of an investing phenomenon called dollar cost averaging. Now, if you've ever looked at the history of a stock price, you'll see that this happens a lot. Constant up and downs, and nobody ever really knows whether it's going to keep going up, keep going down. Basically, no one can predict the future. By investing consistently and periodically, like you would if you were investing every week or every month, you take advantage of averaging out those little waves in the short run and can adequately set yourself up for taking advantage of the long run uptrend that we've seen since the origination of the stock market. It's a lot easier to lose money in the short term than it is to lose money in the long term. So by using dollar cost averaging, you're investing consistently and periodically so that the waves of the short term in the stock price even out over time, helping you mitigate your risk and setting yourself up better for long-term investing. There are super easy ways that you can start investing periodically, and some of them you don't even have to think about. I would really encourage you guys to set up automatic transfers, set aside a certain amount of money that you want to invest every month or every week, and set up an automatic transfer out of your bank account into your investment account. And we'll talk about investment accounts in a second, don't worry. These automatic transfers, once you've set your goal, will make it super easy for more money to come into your investment account without you even having to think about it. And when you set realistic goals for how much money you want to set aside each month, it feels great to form that new habit and to be in the discipline of investing every month. And a couple tools that you guys can use to help you set aside that money that you want to invest periodically are budgeting apps and roundup apps. For instance, there's an app called Chime that will round up every purchase that you make and deposit those roundups into your bank account. So if you buy a $2.50 cup of coffee, that extra 50 cents that would round up to $3 gets deposited into your bank account. Over time, this money adds up, and without even thinking about it, you have a decent amount of money saved up that you can start investing with. There are also apps like Acorns that will automatically invest those roundups for you, so you can link those to your debit card and those roundups will immediately be invested without you even having to pick which stocks or which funds you're going to invest in. I did a review on Acorns that you can check out here for more details. And that leads us into brokerages. Brokerages are the reason that so many people have in the past been intimidated by investing or have thought that they need large amounts of money to start. That's just not true anymore. There are so many free brokerages out there. You don't have to have any amount of money when you sign up for an account, and you don't get charged when you trade stocks. My favorite free brokerage is called Robinhood. I did a review video of them as well that you can watch here, but basically, like I said, it doesn't take any money to make an account, and you also don't spend any money when you trade individual stocks. This allows you to first of all open an account with as little money as you need to, and then you're only going to be paying for what you're investing in rather than paying fees that traditional brokerages would have taken from you. Most brokerages have gone commission free these days, so they won't charge you when you trade stocks, but some of them still have an account minimum. Feel free to do your own research and open whatever brokerage you want, but I would highly suggest Robinhood. It's an easy app you can get on your phone, super simple user interface, lots of educational material, and they even offer you and your friends free stocks when you sign up. If you want to know more, check out the link in the description below. Once you have your free brokerage account open, you can look at your goals and your investment horizon through the self-assessment that you went through in the first step, and then you can link your brokerage account with your bank accounts, set up automatic transfers so that that habit of putting money aside each month will now directly and automatically be transferred into your investing brokerage account. Once you have this brokerage account, the next step is try a strategy. There are so many different investing strategies out there, enough to make anybody's head spin. But I pick out 3 that I think are easy and simple ways to start strategizing how you want to invest. First, you can pick a robo-advisor. In the past, many people have gone to actual people and paid them to invest their money on their behalf. This is really hard to do when you're young because financial advisors make money off of how much money you have to invest. So when you have not that much money to invest, it's really hard to get a financial advisor. Because of this, many companies have come up with robo-advisors that use massive amounts of data, AI, and algorithms to pick investing products for you based on some of the things we've talked about in this video, like your goals, your risk tolerance, your age, income, stage in life, etc. Acorns and Betterment are 2 of the most popular robo-advisors, and they're super easy to set up accounts with. I don't have as much experience with Betterment, but I know that Acorns will invest your roundups, like we talked about earlier, automatically into the market. They make it easy to set up automatic transfers from your bank account into your Acorns account, and they also are a robo-advisor. So once you set up your profile, you can trust that the money that you put into your Acorns account is automatically being invested totally hands-free. Now, if that scares you and you don't want a robot investing your money, I totally understand that. But I will say it's really hard to pick stocks, especially when you're first learning about the stock market, and when you don't have a lot of money to lose, it can be tough. That's why I always suggest that if you're first investing and you don't have a ton of money, the first stock you should buy should be an exchange-traded fund. Exchange-traded funds are kind of like buying a fruit basket. When you buy a fruit basket, you're buying one item, but that item has oranges, apples, bananas, watermelon, whatever type of fruit that is in the fruit basket. Exchange-traded funds are the same idea, but with stocks. You buy one fund, put your money in one place, but you end up owning shares of several different companies. One ETF that I suggest to people a lot is called VOO. It's one ETF that you buy at one price, and you end up owning shares of every company in the S&P 500. The S&P 500 is a collection of 500 of the largest companies in the US, and it's often used as a metric to track how the overall economy is doing. If you bought the exchange-traded fund VOO, when the economy is going well, most of the time that means your investment is increasing in value. When the economy doesn't do well, your money will most likely decrease in value, but it's a really safe way to invest in the long term because the history of the stock market shows that over a lifetime, the economy has always trended upward, and the stock market as a whole has gained value over every lifetime period that it's been around. So I would highly suggest that people invest in an index ETF like VOO to start out with. Now, if you're going to go out and pick individual stocks to buy for yourself when you first start making money, I would highly suggest using online resources. There's a lot of companies out there that will announce stock picks and they can end up being really good investments with way more information and knowledge than you could gather as just a single person. There's a company called The Motley Fool that picks stocks all the time. Some of their stock picks are free and some of them people pay for. I've done reviews of both their free stock picking articles and their paid service, and I haven't seen a way to go wrong. If you're interested more in The Motley Fool, watch the rest of our review videos and check out the link in the description below. One last tool that you can add to your strategy tool belt when you first start investing with very little money is something called fractional shares. So fractional shares. Take a company like Amazon that's worth almost $3,000 a share. How could any investor with less than $3,000 ever invest in that company? Well, until fractional shares, they couldn't. But many brokerages now are offering fractional shares, which just allows you to buy a piece of a share rather than an entire share. Robinhood just rolled out their fractional shares feature, and that's another reason why I love Robinhood as an app for beginning investors, especially those that don't have a ton of money to put into the market when they first start. Okay, so we've made it through 4 of the 5 tips I have, and the last one is super important. Use a stock simulator. Now, I don't know if you've heard of a stock simulator before, but basically they use data that tracks the real stock market and real stock prices, but you can trade on a stock simulator using fake money. It's kind of like trading with monopoly money, except for that you're learning about how that money would be affected in the real stock market if the money was real. Now, I'd be remiss if I didn't mention that Wall Street Survivor happens to have the best stock simulator out there on the market. It's free to sign up for an account, free to use all of our resources to help you learn about trading stocks, and when you sign up you get a free $100,000 virtual portfolio to start learning how to trade stocks with. Over time, as you learn more about the stock market, learn more about certain stocks, and get better at trading and investing, you can transfer that knowledge and those skills into real money as you accumulate more money to start investing with. Okay, so that's my 5 tips to help you invest with very little, almost no money. Hopefully you guys found this video helpful. If you did, please give us a like down below. Comment down below which tip was most helpful. Let us know any feedback you have or ideas for future videos, and don't forget to subscribe to the Wall Street Survivor channel for more videos like this coming very soon. If you're interested in opening your first brokerage account, don't forget to look down below in the description for more details about signing up with a Robinhood account. Also, don't forget to register for your free $100,000 virtual stock portfolio at wallstreetsurvivor.com. And don't forget to subscribe for more videos like this and many others coming soon. Thank you guys again for watching. See you guys in the next video.